Welcome in, everyone, to a brand new episode of the Real Estate Tax Playbook, where we discuss all things real estate, providing timely and precise information to real estate professionals looking to build their own customized tax planning playbook. As always, I'm your host, Evan Ross. I'm a tax director with Brown Edwards & Company, based out of our Roanoke, Virginia location. For those of you still unfamiliar with Brown Edwards & Company, please go check out our website at your convenience. As always, a link to that website can be found in the description of this podcast. On the website, you'll find more information on some of our other service lines, details on our other 11 office locations, and some details on some of our other service providers. With all of that, I'd like to introduce to you our guest for today. We have Price Gutshall with Thalhimer. Price, good to see you. Thanks for being here.
Hey, good morning, Evan. Thanks for having me.
Yeah, no, it's great to have you on. I know we've seen each other a lot of community events lately, a lot of meetings, it seems like, as of late. So I'm glad we're able to make this happen, to get you on the podcast.
Yeah, no, I appreciate it. Looking forward to it.
Great. Well, with that, let's just kind of get started before we get into the meat of the conversation. Just kind of give you an opportunity to introduce yourself, kind of your background, career path, what you do over there at Thalhimer.
Sure. So, been with Thalhimer Commercial Real Estate for 10 years now. Originally, I came from sort of the economic development world. I was at Downtown Roanoke Incorporated, where I was the vice president of economic development, where I spent time working with the businesses in the downtown market, the sub-market, and working on business recruitment and retention. A lot of folks that I was working with were in the real estate world, and I jumped over to the commercial real estate side shortly thereafter. So been doing that for about 10 years, primarily focused in the office and industrial sectors of commercial real estate, leasing and sales, for a long time, just in office. But, we all know what happened in 2020, so I had to diversify a little bit on our focus areas there. But, focusing on office and industrial, our company is a full-service commercial real estate company. We're affiliated with Cushman & Wakefield, which is the largest commercial real estate company, or one of the largest real estate companies in the world. But Thalhimer is based in Richmond. We have a footprint across the entire state of Virginia, and we offer a wide range of service lines, focusing in, like I mentioned, office, industrial, leasing and sales, multifamily sales, and property management. And then retail is also a major component of our work, as well as capital markets side of things. And we also have property management, where we service a number of clients and properties across all those sectors. And global occupier services is one that we're focused on now as well, which includes lease administration, site selection, project management, and property management. It kind of combines all of our service lines together, serving clients with real estate portfolios, multiple locations, and companies that have large footprints. So, kind of both my background there, and as well as a little background on the firm.
Yeah, that's good to get that background as well. So, I mean, obviously you spoke on a bunch of different items there, but really anything real estate related, you all can probably assist with in some form or fashion.
That's right. Yeah, the only area where we don't really touch is in single-family residential.
Very good. Very good. Well, to kind of kick us off, obviously you alluded to it. You're in the commercial real estate space. Let's just talk about from a macro level. Obviously, you said Cushman & Wakefield, y'all have presence worldwide. Let's talk about nationwide. What are you seeing in the market right now?
Yeah, so, it's been an interesting market really since 2020. And trust me, I'm sick of talking about that period of time and that disruption, but it certainly had a major and long-lasting effect, for all of us for various reasons, but in the commercial real estate world particularly, you've seen a lot of change and disruption to that market. On a national level, I think it's no surprise that office was probably one of the most heavily affected in that sectors. And in a lot of the larger markets, you saw major increases in vacancy, or really originally just stopping to use their office space, even though they still had leases that were ongoing. But since then, a large scale downsizing of office use with the increase of work from home and remote work as both an employee benefit and for some companies also a strategy to reduce their costs in real estate. And that really depends on the sector, right? Of office use. You know, if you look at a lot of customer service centers, they were able to invest a lot of infrastructure into a remote work sort of environment. So a lot of those companies kind of stayed in the remote work world, whereas other sectors in the office other office users where they have a lot more of a collaborative environment or focus on culture. You've seen sort of return to the office a bit, where it kind of mixes remote work or hoteling, which is one of the terms for it, where employees can come 2-3 times a week, but it's an employee benefit to be able to have a couple days from work from home. You're seeing a lot of that coming back into play, and even seeing companies asking their employees to come back full time. So the office market's still in flux that way. We're not seeing a lot of new major vacancy coming out from that, other than from the downsizing standpoint, where companies are starting to make long-term decisions that they weren't able to a few years ago. But now with these long-term plans in place, they're able to make longer-term commitments and decisions about how they're going to be using their office space for the next 5, 10 plus years. But that downsizing component is still there. Where we're seeing a kind of a recovery is we're not seeing as much sublease space. We're not seeing companies trying to put space that they still have a long-term commitment on the market for, trying to find tenants to replace their footprint. So that's a positive step in the office world. I think if you look from a national standpoint, the long-term recovery of office, it's not truly expected to get all the way back to the way it was before COVID-19. However, I think it's supposed to be pretty close, probably over the next year or two, subject to obviously unknown market conditions coming up, but certainly seeing that recovery and that return to the office a bit. Industrial really did really well during COVID-19 and the post-pandemic recovery in the market. You see probably some of the lowest vacancy rates in that sector. And, I know we're talking macro, but let's just go real quick to micro, like here in Roanoke and this region. We're sub 3% on vacancy there, which is incredible. And over that same time period since COVID-19, you've seen market rents almost double for industrial space. It's hard to find the kind of space that you need. We don't have a lot of inventory being built here in our market. But during that time period, you saw a lot of speculative construction in a lot of the larger markets and larger corridors for industrial, and it had been a really strong market for industrial properties. Retail also did pretty well on the recovery side of things, and stayed pretty hot. I think there's some talk about kind of cooling down, but nothing of concern there. But it's been pretty strong.
It sounds like obviously industrial, those people have to be in there to make their products outside of COVID, where they may have been shut down for a couple weeks or days or maybe even months. Outside of that very short time period in that industry, they had to be there to make their product. So it makes sense.
That's right.
That there would be more success or more boom.
Yeah. So it's and it's base economy, right? I mean, that's conversion of raw materials, manufacturing, distribution. I mean, how big did distribution get? I mean, it's always been big, but COVID, I mean, just really accelerated, the need for logistics networks to be serving customers, right? I mean, people working from home, spread out, it wasn't the same as before. So it just, from logistics and distribution, manufacturing, all those types of things, industrial really filled the role there.
Great. Yeah. And obviously, I mean, so just moving forward, I know you said you didn't really want to, you're tired of hearing about that 2020 period, COVID-19, all that kind of stuff like that. But obviously, just to speak on kind of leasing versus purchasing, selling, obviously, I'm sure you're seeing that. What have you been seeing as far as leasing versus purchasing?
Yeah. So, I mean, In our market specifically, it's still pretty much, most companies are in a leasing scenario based on the footprint that they need. And really, we're just not a high construction. There's not a ton of new construction in the pipeline, right? So there's not a lot of new assets that are coming out on the market for multi-tenant situations. So leasing is still there. From an office standpoint, it hadn't picked up tremendously, but it's gotten, there's more transactions taking place, like as I mentioned before, because companies are able to make, are in a better position to make long-term decisions about their use of space. From a sales standpoint, there's still the good old-fashioned owner-user purchasers that are looking for a property. They want to have control of the asset as well. There's a number of advantages to that. Just as there are a number of advantages to leasing, where you have some more flexibility. You're not necessarily tied to the real estate at the end of the term of a lease, and that doesn't necessarily become a liability, right? So it's still a pretty good mix. I haven't seen a huge change in that other than the volume of leasing. So leasing, again, focusing on the office component, the leasing has been the primary slowdown in office. But that seems to be some recovery. Investment sales, I mean, that's remained pretty strong overall, market wide, particularly again in the industrial and retail areas. There's office still. People are kind of waiting to see what the long-term play is there, but I would say that it's still a pretty even distribution of leasing and sales, with leasing being kind of the primary user choice.
Are you seeing properties move pretty quickly, or are they sitting for a while for any of those investors looking to offload some real estate?
Yeah, no, that's a great question, and it's really specific to properties. I mean, real estate's all location, yep. But also income, right? Part of that would depend upon what type of income's there, what the investment strategy is, whether we're looking at a value add property, say, one where there's an opportunity to increase rents or make capital improvements to increase value in the property, and as well as increase rents there, versus, redevelopment plays, which is a different type of investment. Obviously, you're looking at it from a development standpoint. It's a different type of pro forma. And you're utilizing different types of strategies for that type of asset. So it depends. If you're priced correctly based on the income or the net operating income on a property, and it's an asset that a lot of these investors are trying to take advantage of or leverage in a portfolio or anything like that, those tend to move a lot quicker, right? Your vacant assets, your historic assets, those are going to be a little slower to move. You're a lot of times looking for a redevelopment play, or you're looking for an owner user. And in a market like ours, it's not a gateway city, right? It's not New York, it's not Washington D.C., but it's not in the middle of nowhere. Kind of, we are having moving parts, and we there is a robust economy here, but there's not a huge pool of those users at any given time, or those investors at any given time. So those are a little slower to move. You got to find the right person with the right vision, and the right investment strategy that fits the asset that they're looking for.
Very good. Yeah, it depends is a common phrase that I use in my world as well. Yeah. Somebody asked a tax question. It depends. There's a lot of different circumstances and scenarios you have to consider.
Sure.
Going back to the lease versus purchasing, I mean, there's also a lot of tax considerations there. Obviously, with a purchase property, you're capitalizing, depreciating that property over 39 years. There's also the opportunity potentially for a cost segregation study, which we spoke on in the first episode of this podcast. So there's that opportunity there as an owner. And then on the flip side, leasing, you're getting to deduct that lease expense every month, annually. Like you alluded to earlier, there's more flexibility. So I see a lot of 10-year leases in the commercial space. I don't know if that's what you see.
Yeah, 5 to 10 years is pretty common there.
Yep, that's what I've seen in my experience as well. So there's definitely advantages, disadvantages to both of them. So you got to consider the tax impacts, the business impacts, and what you're looking to do as a company, as an investor. So appreciate you pointing out some of those items on leasing versus purchasing property.
Sure.
So cool. You also mentioned historic assets. I want to just mention, I think, kind of let you know that I was going to name drop your wife, Katie Gutshall. She's obviously in the historic tax credit space herself. So, have you seen a lot of commercial real estate involved with those projects on her side?
Well, happy to live in the shadow of my wife. It's a wonderful shadow. But
I'm the same. I'm the same way, so I get it.
Yeah, no, she's great. She's the smarter one of us. You know, we met in graduate school, and she was in the SMART program, right? So that she was focused on historic preservation. But yeah, no. So that's been a major. I mean, I think there's no doubt in a lot of markets, but we particularly have seen it in Roanoke. A lot of the older assets. Older office assets, older retail assets, these old department stores in downtown, things like that, leveraging the historic tax credits to bring back these buildings to life. And that is what my wife works on, which is really cool. She did give me a cheat sheet so I didn't mess it up when I was here today. But that has been a major catalyst of redevelopment, and I think long-term economic growth for our region. I mean, that's true throughout the country, but the revitalizations of downtowns over the past 15 years lend a lot of that to the historic tax credit program on both the federal and state level. And it's interesting because on the federal level, it's administered by the National Park Service, right? So, and that's under the Secretary of the Interior. So you have these guidelines for how to treat historic buildings that come from the Secretary of the Interior and the federal government, and that's what's utilized to gauge what can be done in a historic building and qualify for historic tax credits that are, first qualifying for being put on the National Register or being considered a contributing building in a historic district, and then following those guidelines on the preservation, how to treat the building in order to qualify for the federal tax credits. And then there's the state tax credits, which also help, which is administered by the Department of Historic Resources out of Richmond. And those both offer, you can speak to this way better than I can, certainly my wife as well, but those both have really huge tax incentives really to maintain, bring back to life some of these buildings that are some of our most beautiful buildings, right? From periods of time that really had some great architectural movements.
Definitely. Well, I appreciate you mentioning that. And thanks to Katie for making those notes for you to kind of help you guide you through. So obviously Brown Edwards, we're involved in that space pretty heavily, both in the local area and throughout the country. We have projects that we're involved with on the audit and the tax side of those projects. We're actually going to have Pat Murtaugh, a partner with Brown Edwards. I believe he's on the episode next month. He's going to be doing more of a deep dive into historic tax credits. So I appreciate you kind of giving an intro, a little cliffhanger to that conversation we're going to have.
Cool. Don't ask me any more about it because that's definitely on my wife. Yeah. I have to give her a call. Yeah.
We'll ask Katie if there's anything more specific we need to know. So,
That's right.
So very good. Well, you mentioned earlier on pricing in the industrial area, how that really increased significantly, even though there was still a lot of activity in that space. Pricing wise, are you seeing an overall increase across the board at the same rate between industrial, office space, retail, or is it different between each area?
It's different between each area. Industrial, the demand is so high.
Yep.
And the inventory is so low, and that's the main, push for Class B, and that's older product or even newer product. New construction commands a premium rate naturally just because of the cost of construction, but just the sheer demand for industrial space over the past 5+ years has led to that. That's a pure supply and demand relationship. that's impacted that. Office. Fortunately, Roanoke, we tend to be kind of not as exposed as some of the larger markets, right? To major footprints, for example, like if you have a tenant in a building taking up, a third of it, and it's a huge part of the building. We don't really have a lot of that. So with this downsizing movement, Roanoke's been kind of insulated from major vacancies like that and that impacting rates. Because I would say the rents have been, have they kept up with inflation? Yeah, a little bit, but they haven't gone down. We've not seen decreases in office leasing rates. So that's been good.
Yeah, that's great. Yeah, I mean, I think that's just the way of the world now with inflation. Prices are going to continue to stay steady or go up, increase. I don't know that we're ever going to see a point where the office space, the price of that per square foot is going down in the future. So anyways, where do you kind of see the commercial real estate space going in the coming months, years?
Yeah, so I mean, I think that's always a tall order, tall question. We've got, and I'd plug Cushman & Wakefield right now. If you ever go to cushmanwakefield.com or cushwake.com, check out our insights. There's a huge, robust team of researchers that are, getting deep into the analytics and looking at what long-term kind of outlooks are for the markets, and they've been really good and spot on with what we're looking at. They had predicted a recovery, and not just Cushwake, but generally the idea of a recovery in office space by 2025. It seems like we're kind of on that trajectory, and it feels that way too. I mean, like I mentioned before and a few times in this podcast, we're seeing those long-term decisions starting to take place. I mean, there was 3 years where people just were like, "Hey, we just don't know where we're gonna be. How many employees we're gonna have in the office, all that kind of stuff." And that decision making is taking place now, and that's a huge improvement to the market. I think industrial and retail are going to be going strong for the foreseeable future. I can't predict any true disruptions that could come up in the market that changes that trajectory. But from what it looks like now, it's still, pretty strong markets in both areas, even if there's a little bit of cooling. I mean, everything has to kind of cool a little bit, right? If you're too hot.
Well, that's good. That's good to hear because, like you said, there has been some uncertainty for the past 2020 to 2023, something like that. Now we've gotten to a point where, barring no huge pandemic or outbreak or something like that, looks like we're moving in the right direction where companies are willing to make long-term decisions again.
Although that thing you and I went to about AI, I mean, who knows? Maybe that's the disruption, right? I'm still getting my head around that.
You know what? I had Dr. Liska on the podcast, and he actually just went into more detail on AI and utilizing it within real estate just to make things more efficient. Some of that stuff is well beyond my scope and knowledge, but it's really interesting because it seems like technology is just continuing to change the way we do business.
I know. I'm starting to feel like the old man now, with all these folks using the AI and all that good stuff and trying to keep up. So it's a brave new world.
It blows my mind that my kids, my oldest is almost 7. The fact that the stuff she can do with technology, I'm like, what is going on? I didn't even know what a cell phone was or have one when I was that age.
Yeah.
So she doesn't have one, but she knows how to use it. So
right.
Very interesting. So as far as transaction wise, let's just go back to that. A few tax strategies for deferral that are out there. Obviously, installment sales with properties, 1031 exchanges. Do you deal with those a lot? Does Thalhimer interact in any way with those transactions?
Certainly. Oh yeah. I mean, plenty of clients, plenty of customers that are looking for, those tax deferment opportunities. If you're looking for the 1031 exchange, that's something that we are absolutely ready and here to help with. We consult clients on that all the time. And it gives an opportunity to identify a number of properties that could be, that could qualify for their needs. So that's an area that we're very much involved in. And of course, structuring sales, when you're looking at, installment sales, I mean, that's absolutely something that we're a part of, and how you can get creative to achieve a transaction, but also defer those tax liabilities down the road a little bit. So yeah, we're very involved in that, and here to help with that transition.
Yeah. So listeners out there, please feel free to reach out to Price, someone at Thalhimer. I'm sure they can help you with pretty much any of your real estate needs outside of residential property. Is that what it sounded?
Well, yeah, I qualify that just single family primary home resident.
Okay, so multifamily, you deal with those spaces,
Multifamily, yeah,
apartments.
absolutely. We have a multifamily team. Clay Taylor in our office, capital markets, multifamily. That very much involved in that, and office and industrial and real retail.
Great. Well,
and land. Yeah, we'll sell land too.
Land. Hey, there you go. There you go. So, anyways, thanks for clarifying that it is just the single family homes that you all kind of stay away from that space. But really, anything else sounds like you all can help in some form or fashion.
Absolutely.
So sweet. Well, that is a wrap for this episode, but I'd like to give you, Price, an opportunity just to share your contact information. If folks out there do want to reach out to you, ask further questions on commercial real estate, just give you the chance to either provide your email, number, whatever you feel comfortable providing.
So Price Gutshall, this is always a fun one when I'm cold calling or something like that to give the info out. But Price Gutshall, which is PRICE. Period GUTSHALL at Thalhimer.com, and that's THALHIMER.com. And we can be reached at 540-767-3011.
Great. Appreciate it, Price. Thanks for coming on the podcast today, providing some insights on the commercial real estate industry, specifically industrial and office space. So again, I appreciate you coming on.
Yeah, I appreciate the opportunity. Thank you, Evan.
Of course. Well, with that, that's a wrap for this episode of the Real Estate Tax Playbook. As always, we appreciate our listeners for tuning in. If you have not already, please subscribe wherever you get your podcast. We'd love for you to continue to tune in. We'll be back next month with another episode. Likely, it's going to be the historic tax credit content with Pat Murtaugh from the Brown Edwards Roanoke office. So until then, take care.